Wall Street Journal, on the line, able to discuss all things Snap. Steve, how are you?
Well, thanks for having me, guys.
Glad to have you on. All right, we know Snap right now and pre-market trading down nearly 24%. What is your reaction to Snap's earnings?
I mean, it was ugly pretty much across the board. No matter which metric you look at, it was worse than analysts were anticipating. So, the key number right now for Snap is the daily active users. This measures how many people are on the site on the app each and every day. That was 166 million. That was fewer than analysts were anticipating. And to put that into perspective, Instagram Stories has 200 million now, so Snap is trailing one of its main competitors right there. And if you look at just some of the other, headline numbers, a $2.2 billion net loss, revenue of about 150 million. Again, these growth rates are, at least in terms of the revenue side, the growth was really not what the street was looking for, and so that's why you're seeing such a big move in the stock here.
But Steven, I mean, the fact that it is a newer stock, it came into the market with only $39 million in revenue, the fact that it is up to 150, there is some cause for, some optimism, wouldn't you think, from just that perspective?
Oh, absolutely. And listen, the product itself is, I would argue, is a pretty great product. And I mean, there are 3 billion snaps that are being sent every single day. They're making, they're making 90 cents per user, which is in revenue, which is, these are decent numbers for them. The problem, at least when you look in terms of just how the stock is moving, is that there was so much hype and anticipation about this company, and it was so richly valued after the IPO. And so I think now you're starting to see a little bit of a return to reality, I would argue. And so, things are kind of looking, so that's why you're seeing the big move in the stock.
Steve, let's focus really quickly on ad revenue. Now, this is still a company that's struggling to convince Wall Street analysts and investors that it can really compete with the likes of Facebook and with the likes of Google. In this particular earnings report, though, they're not giving any of these analysts real reason to believe that they can.
Yeah, that's a great point. And, another thing to keep in mind, too, is that when you have new companies like this, their first earnings reports, there's lots of hype around them. It's not necessarily indicative of what's going to happen in the future. If we look at Snap's biggest competitor, Facebook stock went down 12% after its first earnings report 5 years ago. There was a lot of concern about Facebook. Is it overhyped? Is it overvalued? And obviously, 5 years later, look what's happened. So, and you see with other competitors as well, Twitter dropped 24% after its first earnings report. GoPro dropped 15%. Now, these are just 3 examples, but it just goes to show, though, that one report is not indicative of what's going to happen in the future. I would just argue, though, that expectations had gotten too high around Snap, especially considering the environment that they're in right now.
Okay,
thanks for watching Cheddar on YouTube. If you want to see more of our videos, click on one of these over here and be sure to subscribe to our channel right down here.